Let's take a look at some charts on Monero from this week's article on Brave New Coin. So Monero is a privacy coin by default, meaning all users are opted into the privacy. They cannot opt out of the privacy. They cannot accidentally send an address on a non-private transaction. Exchanges cannot disable the privacy, that sort of thing. Grin is really the only other default privacy coin that's worth mentioning and is included in this graphic. So if we compare all these together, which you really can't because they're, at the end of the day, very different. They all have privacy capabilities, but they're very different, really. You can't see XMR's daily active addresses. You can't see its daily transaction volume. That alone should tell you this is what an actual privacy coin should be if you're looking to obscure addresses and values. So XMR leads by market cap and fees. Its transactions per day have hit an all-time high. I'll show that on another graph. And it has a lot of GitHub commits compared to the other coins in this list. So there's definitely active development on the coin. If we look at the hash rate and difficulty for Monero, in November they switched to a different algorithm altogether called RandomX. Previously it was Crypto Night. So although the hash rate looks like it's at an all-time high, in reality it's just two different algorithms. You can't really compare the two to each other. But since the switchover, hash rate has risen pretty substantially. This was a cloud mining or bot mining spike, and as you can see, it wasn't sustainable. But overall hash rate looks healthy post RandomX implementation. One thing that isn't healthy is the distribution of hash rate between the two pools here. 58% between support XMR and mine XMR, which may or may not be the same entity. I'm not exactly sure, but my guess is they are, or related. They're related in somehow is my guess. But nonetheless, I don't know for RandomX specifically how vital it is that there's less than 51% hash rate between two entities. It should signal that there's a security risk for any proof of work chain. Now this would require some collaboration and collusion to attack Monero in some way. But at the end of the day, over time, you want this to spread out significantly. You don't want a risk of centralization or 51% attack. You don't want that in the conversation. If you're talking about the health of a long-term proof of work coin. If we compare BTC to Monero's supply and inflation rate, they're relatively similar. Monero has a continuous decrease in emissions, whereas BTC has halvings. Their inflations are pretty close. BTC is around 1.8, Monero is around 2.1. Their supplies are pretty similar. Monero will have a supply in perpetuity, so it'll continue minting, whereas BTC stops at 21 million. Just minor differences between the two. If we look at transaction count, like I mentioned, at an all-time high, this usually is a lagging indicator to difficulty. For whatever reason, spikes in difficulty tend to lead to spikes in transactions per day. This probably is related to botnet activity, ransomware activity, all sorts of nefarious things that Monero is attached to. There's really a headline every day for Monero as far as its involvement in ransomware, crypto locker, crypto jacker, crypto miner, browser hijacking, all sorts of stuff, because it's really good at sending transactions privately. And that kind of is what it is. It doesn't mean Monero's a criminal enterprise. It's just Monero is a favorite among criminals. If we compare Monero's transaction fees to all the other privacy coins, you can see Monero's pretty steadily been above most other coins. I don't really know what's going on with PIVX, to be completely honest, because they've got virtually no transactions on the chain, yet fees are higher than every other coin on this list, so that points to scaling issues more than anything. And if we look at Monero's block size compared to the others, again, PIVX at the way bottom here, kind of empty blocks. Monero's blocks have been getting slightly larger and larger over the past 9 months, 10 months. And they implemented in late 2018 a scaling chain fix for bulletproofs, kind of the way privacy worked on the chain got smaller. So they're quickly approaching the previous level of block size. So this says there's definitely a lot of activity compared to previously. And if they hadn't implemented what they did in November 2018, then fees would be much higher than they are now. If you look at Google Trends, it's just been flat over the past couple of years, as is the case with most coins, and especially if they haven't reached their all-time high again since 2017, 2018. And over the past 2 years, it's just been flat. Even despite all the headlines about Monero and ransomware and nefarious activity, Google Trends for Monero is flat. Flipping to technicals, we have Bitfinex long shorts, yearly pivots, VPVR, RSI, 50 and 200 EMA. And the first thing that sticks out to me is the VPVR profile, like it does for most coins, where there's a really stark contrast between levels here. So there's a level at 50, there's a level at 100, there's a level at 120. So it's climbing the ladder. It's reaching above the yearly pivot at R1. It does have a growing bearish divergence. So this divergence can get canceled if you get a higher high on RSI. So it's always tough to evaluate completely what's going on here. If anything, it can give you trepidation for the long side because it says that the momentum currently is less than it was at a lower price. It is above 100, which is the psychological resistance. It's way above the 50 and 200 in a good way. The golden cross earlier this year has paid off and the bull trend continues. And I didn't mention this in the article, but this whole thing looks like a Wyckofian accumulation block with a markup phase basically in action now. So as far as bullish trend continuation goes, it looks extremely healthy and looks like it has more in the tank. Long shorts, not too much to comment on. Overall activity on Bitfinex for Monero is pretty low for Monero USD. Looking at the cloud's liked it since earlier this year as well, and it recently had a bullish TK recross above the cloud, which is the most bullish indicator in the cloud system. You can see a bearish TK cross below the cloud, bearish TK recross below the cloud, which is a bearish continuation sign, and a strong bullish continuation sign would be exactly what Monero had a few days ago, and no surprises, it broke to a 1 year high. Let's see, over 1 year high. So July 2019 was the last time price was above 100 really. And if we look at Monero BTC on the 2-day chart, and I zoom way out because it's been messy on the daily chart, kind of like this here, messy, where it's just, in reality, it's untradeable trendlessness that just is running around, right? But if you zoom out, you can see, all right, we've been below the cloud, below the 50, below the 200 for 2 years. Only recently has the 50 and the 200, in this case, the 100 and the 400 on the daily, about to flip bullish. Cloud is finally bullish after 2 years. It's above the yearly pivot. The concern now for the upside is this 0.1 psychological support resist level, and then 0.12 for the next yearly pivot on the upside. So there's lots of resistance here, and this will look different. This is Poloniex, but it'll look different on different exchanges. But just like the USD pair, this looks really good on trend because it's been bearish for a long time. It's been a laggard as far as other alts are concerned. It doesn't have DeFi. It doesn't have any fancy, flashy stuff that's been going on over the past few months. It's just grinding up slowly, and ready to go. So I like Monero from a fundamental and technical perspective. Technicals look the best they've looked in 2 years.